team, Jesse and Alex on the call as soon as they arrive. But tell you what, before they do, let's do the legal. So as usual, nothing discussed on this Spaces session constitutes trading or investment advice or infers any endorsement by PiQ Global Limited, traders PiQ or PiQ Suite, or indeed the hosts, which, as you know by now, are the amazing AlphaPicks guys and myself. And let's just wait for them to join. Hello, Mr. Brown. There's one of them. 1 second. Adding to. I nearly added Michael Brown as a co-host then. Bit of muscle memory. Hello, Tom. Right. Let's see. Has that worked? I believe it has.
Afternoon, Ryan.
Hello.
Hello.
Hello. How the devil are you?
Oh, I'm not bad. I'm not bad at all.
Oh, hang on. Well, I'm not sure I like that. The little.
Nah, all groovy, all groovy. Are you? You sound like you're not in the Stafford today.
I'm not in the Stafford today. I was yesterday. No. I was yesterday, but no, I'm in quite an echoey room at the moment. So I apologise for that.
It's okay. It's no drama. I see we've got Mr. Williamson.
Sorry. Yes, there he is, Mr. Williams. Hang on one sec. Invite the co-host. There we go. So what's been occurring?
Yeah, lots been going on actually. I mean, actually,
good.
I'll start actually with a shameless plug. We launched our new FX sort of, I don't want to call it sort of sister newsletter, if that's the right phrase. So yeah, essentially it's targeted more towards our sort of family office, hedge fund, institutional client base. But yeah, basically specifically focused on primarily FX and rates. So yeah, that's been cooking up for a couple of months now. So it's fantastic. That's now live.
Yeah, so for those that just might not be aware, so obviously the content you guys you put out some great content, obviously. Shameless plug, but you really, really do. But so you put out like some free stuff, you put out some kind of some paid stuff that is kind of really kind of like easy and very accessible to like all comers to markets, basically. And then this new bit is more like the elevated, kind of the more professional kind of, really pitching it to that higher level, right? That's how I understand it.
Yeah, right. Exactly. Yeah. The main page is essentially trying to take more complicated and interesting news stories and putting them in a way where the masses can understand and find it interesting, because there's a lot of very dry news out there. And then on the new FX and rates piece, it's still trying to maintain that interest and putting things across in an interesting manner, but just slightly more geared towards the institutional crowd, because as we both know, the institutional content that's out there, a lot of the sort of sell side bits and bobs are still incredibly dry. So yeah, I think it's ripe for change. But yeah, so very interesting on that front. But enough of me sort of waffling on about shameless plugs.
No, mate. You got to big yourself up, because it is phenomenal content you put out there. So I'm all for it.
That's very kind. It's very kind. Thank you. Jesse's smiling behind the screen. We can't.
Yeah, so good afternoon. Sorry, I didn't want to interrupt the plug, but afternoon, guys.
Good afternoon, Jesse. I was going to say, we can't basically do a review of this week without talking about DeepSeek. And so I
will warn you. Tom Talks Cars is on the call, and he's been getting very ranty at people for kind of misunderstanding like the leaks, or like the mess up with the OPSEC and all stuff like that. So be careful what you say. You might start.
Be careful what we say. Okay, understood. Does it? Yeah, I mean, I get even more angry for telling we're at the Devonshire trying the best Guinnesses in London, but we'll leave that for the moment. So I think basically everyone knows the story around DeepSeek, so I'm not going to basically tread over old ground there. I thought the interesting thing to do would basically be to comment and get everyone's opinions here on where they see it, the reaction we've seen, and where we go from here. And I mean, if I kick off, I mean, from my perspective, at a very high level, I don't see it being as much of a problem as I think the market has reacted to it. And when I talk about the market, also by proxy talking about Nvidia.
I think that is exactly what we're talking about.
So it's like, when I look at the chart, Nvidia was trading at base like 143 pre obviously Monday open, or into the futures trading, and it's now basically 124. So it hasn't made back the gap from that fall. But from my perspective, and I think the way I can best summarize up is with Javon's paradox, which I saw being thrown around a little bit earlier in the week, which is real saucy to throw out the box. But the premise of that is that as you get advancement from technology, you get increased demand. And you get increased demand at the same time as costs reduce. So
Yeah.
it's kind of like this whole thing with DeepSeek and the premise that they've managed to build and train this thing on a fraction of the cost of something like OpenAI. I don't dispute, and I think you're going to see increased other models popping up, becoming more commoditized, etc. Cost fall, but at the same time, Nvidia is still in the running for the chips and for the provision of a lot of the bits that power this in the back end. So yes, is Nvidia going to suffer from maybe having to trim prices?
Oh, have we lost him? Or have we lost me?
I think Nvidia is a buy here. Obviously, not financial advice,
Yeah,
but that's based on the paradox. That's my take.
I'm going to admit, and obviously because I know I'm going to probably see Tom for a beer later on, so I do not want to anger him, so I'm going to be very careful what I say. I think you're right. I'm actually surprised that that Nvidia hasn't closed the gap by I did say on like Tuesday, I think it closes the gap by Friday's close. There's still a chance, but it's obviously less likely. But yeah, I make you right. Also, that there's so many unknowns with this, right? We actually don't know how many NVIDIA, we don't actually know what's gone into making DeepSeek, right? And I'm not going to pretend to understand any of it, but there's people already saying that actually they've had access to far more NVIDIA chips than they're letting on. Also, they basically started with OpenAI's code base, and they can't, but again, people saying, "Oh, this is a nail in the coffin for NVIDIA." I don't see it that way. We're still, to coin obviously Cam's on the show, to coin a crypto kind of cliche or whatever it's called, but we are still so early in the AI kind of front. So anyone selling NVIDIA on the back of, oh my God, that means we don't need NVIDIA chips anymore, I think is absolutely bonkers. And I'm hoping Tom agrees when we have a pint later on, or else I'm wearing Guinness. But I think I'm with you. Like, this is not trading advice, and also I do not believe. I'm not one of these believers of this whole accounting sham thing that that whole like cult of it's it's just accounting numbers. I speak to people that buy shit tons of NVIDIA chips, and I'm friendly with, including Tom. They're buying a lot of NVIDIA chips, and they're small fry compared to these big things that are going on. So I'm not sold on the whole idea that DeepSeek is the end of NVIDIA.
Yeah, Jay, any thoughts?
Yeah, what's Jay saying?
So I similar thoughts on the NVIDIA side. Maybe I'll just focus more on like the general AI, not to just repeat the same stuff. I think it's probably a positive development for AI as a whole, and there's more winners than losers off this. For example, we've seen this week like software has been very, very strong off the back of these developments. Obviously, it makes AI infrastructure more to implement sooner than maybe anticipated. And there have been losers from it, like AI Power, for example, sold off quite heavily. I remember there was a screenshot someone posted of a couple of stocks, and they were all down 20% on Monday. So there are some losers, but I think ultimately, as a whole, it's a positive development for AI. And it's not the end for NVIDIA. It maybe just changes a little bit of the story, but I think there's other areas that you can focus on, software, for example, which look very, very attractive.
Well, and also I can't remember who, or someone made a good point. They were like, look, I wouldn't be actually, it might have been Sitz. I can't remember who it was, but someone would say, look, I wouldn't be a bit surprised. Actually, it might be Evan, actually. I wouldn't be a bit surprised if in like 2 weeks' time, no one's talking about DeepSeek anymore. It's like completely forgotten. And there's every chance because, everyone knows that we love like the next big thing. The next big news, like what we were talking about quantum computing a couple of weeks ago, and then we find out a week later that is decades away from still happening.
That is true. That is true. Although what interested me actually is quite a nice segment on from this, because we got several of the Mag 7 earnings over the course of the week, and on all of the earnings calls for the major ones that I saw, they were asked about DeepSeek and the implications for them. And what I thought was quite interesting is that all of them essentially said that it's a good thing, that they were sort of positive on it. Saw that with Tim Cook yesterday at Apple, where he thought there's basically the innovation that drives efficiency is a good thing. And I think that's the message from these big guys. But the point I would say on your Metas, your Microsofts, your Apples, is that from the results, they're still investing heavily in large capex spending, AI infrastructure, all that jazz. And I feel there's going to come a little point, though, in the not too distant future, where it's like it almost feels for these big companies, their default is, yes, we're involved in AI. We're spending. I mean, Microsoft on that Stargate story last week were like, we're good for our 80 billion in capex spending, and so it's like, yes, they're pumping cash into infrastructure capex on AI, but ultimately there's going to come a point where it's like, okay, guys, but actually, where's your winner from this? Like, you can't just invest in AI infrastructure. You need to tangibly have something that sets you apart. And certainly from Apple's results, the whole Apple Intelligence thing, that it basically showed it hasn't really moved the needle in iPhone sales, the whole Apple Intelligence launch. So that's my slight concern, is that some of these Mag 7s are hiding behind the premise of investing for AI infrastructure, but I don't think people are quite appreciating, well, what are you going to do after that?
Yeah, no, I completely get what you're saying. Yeah, because it's almost like, coming out of a headline saying you're about to stick 100 billion into AI research, it's probably good for a few percentage points on your stock price. Just saying that, but then go down the road like a couple of years or a year or so, people are going to start saying, well, hang on, what did we get for that 100 billion?
Yeah, agreed. So yeah, that was earnings. I suppose let's turn to central banks, if I may.
Yes.
We had the Fed, we had ECB. The crux of it, and again, weighing in on purely my opinion on this, both actually pretty dry, pretty dull. I didn't really learn anything new from the Fed on Wednesday night, and I'm a very stupid person.
I'm so glad you said it, because I came away from it thinking I've not, that was literally like 2 hours of my life that I've just completely wasted.
Yeah. So nothing much from the Fed, and I'd say ECB yesterday. Lagarde, again, an impressive shade of brown considering it's winter in the EU. But aside from her complexion, I didn't really learn anything new from the ECB meeting.
I think a lot of it, you can forgive them, though, I suppose. And Jesse, I'd like to hear your opinion on this, but you can kind of forgive them because, everyone's waiting for tomorrow, basically, Feb the 1st. What the hell is going on with tariffs? So, why kind of rock the boat too much ahead of all of that? Because, Monday could be a very exciting open, well, Sunday night, sorry, on Globex, CME, big shout out. But yeah, it's very interesting to see what's going on there. But no, I make you right. It's like, it was all very much priced in as well. There's people, you can make an argument for a slightly hawkier tone from Powell, but then again, one of the key kind of things that the markets got roiled on was the fact that just Grammarly, as I pointed out to Michael Brown, Grammarly basically just tidied up some of their language from the deck statement, and the markets went mad to the extent where Powell had to come out and just say, guys, calm down, we were literally just tidying up the language.
Yeah. Jay, anything you want to add? Did you learn anything this week on those?
In general?
In general?
No,
he didn't. Fantastic. That shows the depth of of quality we have on the team.
Yeah, exactly.
Brilliant.
Just on tariffs.
That Grammarly point I heard. Yes.
Yeah, go on. We got you.
Is he on Was he? Hello? What's going on?
I think the Mexican cartels have got him.
I got muted. I don't know what happened.
But
it kind of cut out for a second.
Right. So just can you hear me? Are you on a delay or something? This is carnage.
He's on mute.
He's on mute. Oh God. Right. Anyway, tariffs.
That means there's
what do we think is going to happen with tariffs on tomorrow?
I think Jesse's got one of those. He hasn't got those premium feeds, so he's got the delayed.
Yeah, exactly. He's not
The
paid up.
delay.
He's
Not
still
paid up.
responding to questions from last week. But okay, so Alex,
Tariffs.
question to you, because you're on my
Yeah.
you're on my time zone. What do you think is going to happen with tariffs? Obviously, that's
Uh,
yeah. If you can tell me the answer, great. If you can be correct.
Yeah. No, I do think I don't think Trump's bluffing on this one. I do think that they will go ahead on Mexico and Canada, and I think that the new ones, I in terms of is it price, yes or no, I think it pretty much is price. Like we did see a bit of an initial kick lower in the Canadian dollar and the peso as a result on it. I think from here, though, it'll be interesting whether oil gets exempt from the
Yeah,
sanctions or
yes,
not.
yeah,
I think
yeah.
that's the one. So essentially, I don't think you'll see too much reaction potentially from an equities point of view, but certainly something like oil futures, I think, is the space that could see the highest sort of vol. Over the course of whenever he decides yes or no.
Yeah, and this thing, I think the key thing is like even if he doesn't, obviously me and fair enough, me and he's back, he's waving. Me and Michael Brown
So
were talking about this this morning, I think it was, and we were kind of saying, look, even if Trump doesn't go gangbusters on tariffs over the weekend / Monday, he's still going to be holding it over them. I'm going to pat myself on the back for getting sort of Damocles into a conversation, but it will be hanging over people. It will be hanging over countries. He will keep, using that kind of stick. So, again, not trading advice or anything, but as me and Michael Brown were just chatting this morning, it was a bit concerning that we were both in complete agreement, which it seems to be happening more and more often, which again for Michael is very unnerving because you do not want to be agreeing with me most of the time. But we were saying that the downside risks to peso and the loonie, the CAD dollar, I think it's far exceeds the kind of the potential relief upside if we don't get anything substantial or there's no mention of it. I do, I think there's a lot of downside potential in the market there. Again, because even if he comes out and said, okay, well, Feb the 1st has happened. All right, do you know what? I'm not really going to do any tariffs at the moment. But he's not going to word it like that. He's going to word it like, I'm still thinking about it. They're still on the cards. I want to do more. We're going to do more kind of research into it or whatever. It's not going to go away. But one thing I do like, and fair play to Trump for doing it like this, like sanctions and tariffs. We know, sanctions especially don't really work, right? They're very, they're not really implemented very well. You've got the EU is still buying Russian gas via other EU. Sorry, Germany's still buying Russian gas from other EU countries, etc., etc., etc. Tariffs, especially because when we hear about tariffs, traditionally it's country A doesn't like what country B is doing, and then it's like a month, 2 months of talking about it. And then they kind of they go away, they come back and say, well, this is the tariff idea. It's then going to be implemented in another month's time. It's very, very long-winded. It gives the market so much time, and also the countries themselves so much time just to kind of ignore it and work around it. But what I thought we saw that was interesting, what we saw that I thought was interesting with Trump, with the Colombia situation, he literally went, they turned away a couple of flights for deportations, Colombia did. And Trump went, right, there you go, 25% tariffs. And I'm going to double it in a couple of weeks' time unless you sort yourselves out. And within minutes, not only did the Colombian leader turn around and say, okay, no, I take it back. We'll start accepting flights. He even volunteered to give up his own presidential plane to ship more deportations over. So I think using tariffs as like a shock tactic is something we haven't really seen. And it's great for markets. It's great for kind of trading volatility and options on that because we really are back into the halcyon days of headline risk. And I'm a big fan of headline risk. So I think it's got a really interesting thing to keep an eye on.
I agree with all that, and I think the other reason why it could potentially be more of a scaremongering tactic is because when you actually look at the some stocks yesterday, so the two I noted was Ford and General Motors. If you look at the intraday moves on those from the announcements, both of them dropped. I mean, we're not talking about 5-10% drop. I think they dropped like 0.5% or something. But the point was they both dropped off it because they have they heavily rely on the sort of supply chains that span across Canada and Mexico. The sort of supply chain issues there, the raw parts, materials, blah blah blah, and the potential for tax on their exports going out. So I think when Trump is doing this brash and bold statement, that's fine. But Ford and General Motors are like, the flying the flag for America in terms of, their production and their, this is, buy America. So he won't, and it will be deeply unpopular if those type of companies, obviously their share prices fall and, their actual financial performance gets hindered as a result of some of these import tariffs he's chatting about. So I think also that's something to watch very carefully, because that ultimately won't be popular domestically.
No, I completely agree.
Yeah.
No,
Jesse, we got you back.
I feel sorry for you if I'm agreeing.
I was midway talking about Powell, and then I hear you guys talking about the Mexican cartel, and I had no idea what was going on.
Fine. Okay.
So yeah, I caught the back end of Is it good? Can you guys hear me?
Yeah, all good.
Just about, yeah.
Oh, okay.
No, not anymore.
Yeah. So.
No.
No, it's no good. It's no good, Jake.
No, right, we're
No.
bidding you. We're bidding you. You're off.
See you
Right, you're off.
later.
Right,
He knew
right.
what time it was. Anyway, but yeah, I'd say those are the main things actually from my point of view. The Mag 7 earnings, the deep sea story, and the central banks and tariffs. 4 big stories. And I think the way I'd sum everything up from this week is that it's, if you are an active stock picker or more of an active macro trader, these are great conditions to be involved in. So I think the overall takeaway I'd say is, from a week like this, where you have geopolitics coming in, you have central banks coming in, you have corporate earnings coming in, it's yes, there's obviously significant risk that you need to account for, but this is where, if you put your line in the sand and you stick to your guns on whatever convictions you have, the difference versus passive management is these type of markets. That would be my conclusion.
No, exactly. Make markets great again. I've got a question for you before we say goodbye. Obviously, how long ago was it? It was quite a while ago that we were talking about the euro and all the downside that we see for it. I know you guys put on you recommended a put spread, correct? Is that right? If I remember correctly, on the euro.
Yeah.
What's your overall consensus? What's your overall kind of view on the euro at the moment, in terms of euro dollar? Are you still thinking bearish further?
No. That's a good question, actually, because the piece dropping next week on the FX channel is on euro having reached sort of peak pessimism, and the reason for this, and actually I'll give a big shout out to Michael Brown, who over the Christmas holidays was on Bloomberg, and actually pointed.
Please don't give him compliments like that. I've got to see it. I don't need that.
And I was in the gym. And I was watching it, and I was like, a gym, GYM. It's the Midland accent.
Oh, gym.
The gym. I was lifting weights, and when he spoke about it, I was like, it's a very interesting perspective, because I do respect Michael. I was like, I think it may be too early to call peak pessimism on the euro. But as of probably a week ago, I pretty much changed my view as well, and agree that peak pessimism, from my perspective, is potentially in. And I actually think, to back that point up, is when you look at something like the ECB meeting yesterday, where they flagged up, they kept the same language, risks tilted to the downside on growth, we're concerned about X and Y, yada yada yada. We didn't really, and obviously they cut interest rates as well. The euro, it didn't move particularly, but arguably was slightly up, I think, by the time sort of New York close came along. And so I do think that, if anything, is an indication that you could have, the pessimism in their statements isn't really causing significant weakness in the Eurozone. And the second point I would add, which was a really interesting chart from last week, from the Bank of America fund manager surveys, was the rotation we've seen into European equities, and it's something like, it's the largest 2-week inflow for a significant period. I won't say a particular time frame because I don't know what it is, but a significant period. And so, from my perspective, I'm not going to say Europe are out of the woods because it's really not. But
I was going to say then we would disagree.
yeah, would disagree. But essentially, from where we are priced now on something like a euro dollar, and the reason why I like to reference this as euro dollar is because I think the other view we have is that I think the dollar index has peaked for the year at 110. So I think you can play a softer dollar with slightly overly pessimistic euro. And yeah, do I think we see parity in euro dollar anymore? No, I don't. And
I can
happy to
dream.
revise that view.
I can dream.
Mm.
I still remain very, very bearish Europe. But stock markets are not indicative of underlying economies anymore. That's not been the case since the global financial crisis. So, that's not to say stocks will rally. Sorry, that's not to say stocks will come off. But in terms of the euro, I still believe, my opinion is, and I don't like being a perma bear on anything, but I will be a perma bear on the euro. Yeah, shoot me. I do think we need to get another leg down. But you make a very valid point about, there are two sides to the trade, right? The dollar and the euro. So if we have got a softer dollar, then we need a much softer euro for the pair to come off. A very interesting one. Well, look, I'm glad I asked that question because it seems to tie in nicely with something you're bringing out next week. So that was nice.
Yeah, exactly. And look, I'll make you a market. I'll sell you some parity euro dollar puts.
What's the
6 month expiry? 6 months. You want to take that?
Dinner at the Stafford.
Yeah, sure. End of
Yeah,
fine.
We'll sort something out. But yeah, I'll take parity.
You need to check what my pricing is first, anyway.
Yeah, exactly that. Right. Okay. I think we done. I think that's it.
Yeah, we're done.
Awesome. Well, it was a pleasure talking to you. Not so much Jay, but hopefully we get that all sorted out for next week. And also, we need to be doing far more shorter form shows as well. I'm actually thinking about I'm putting you on the spot here now, but I'm actually thinking about maybe pitching to you guys maybe some shorter ones regarding like the notes you bring out as well, so we can kind of have a quick overview of the notes you bring out. Just to get people interested in what you're doing and kind of get people clicking. So I think that'd be something interesting to play along with.
Definitely.
But we've got tons to talk about, and also some very good discussions with CME this week as well that I've had. Hopefully, getting my claws into them, and also they're bringing out some wonderful products in the next quarter. And obviously, me and you, us and AlphaPicks PiQ and AlphaPicks can do some tie-ups with that and help get that going as well. So some really fun times coming ahead. But for now, thank you very much for coming on and talking to us. Again, not so much Jay, absolute shambles. I blame his shoes. He's got some rascal shoes on probably. We'll catch you next week.